Good morning, everybody. Welcome to another daily market report brought to you by Mike Bjork. Today is Tuesday, July 16th. Hope you guys having a great day. We got a lot of economic data to go over today, so we'll just jump right into it. We'll start with the retail sales, which is an important piece of data we do want to look at today because it does weigh a bit on there. It kind of helps us gauge the consumer side of things of where the economy's at. And in May, we had a 0.4% growth in retail sales. Forecast was supposed to dip in June to 0.1. However, it continued that same trend at 0.4% in June. So when you strip out big ticket like autos that have the tendency, because of the higher price, they can skew the numbers. We had the exact same numbers as the retail sales, the headline there, at 0.4% in May, and same forecast as well as going up 0.4%. So good numbers there. It's showing consumers are still not really affected yet. Even though things are slowing down a little bit, consumers are still out shopping, which is obviously a good sign for the economy because if consumers stop spending, that means economy is going to come to a halt. Let's kind of move on here. We got industrial production. We're seeing obviously a slowdown here. We had 0.4% growth in May, 0.1% forecast for June. However, basic came to a screeching halt. But we did see that in June with a lot of the manufacturing, when you saw the Philly Fed, Chicago Fed, a lot of them were in contraction territory. So we knew June would be kind of a slow one, and this index also kind of indicates the same thing. We also go to capacity utilization slowing down in June. So we had a 78.1% back in May. Forecast supposed to be a slight tick down to 78. However, slid a little bit further down 2.2 basically to 77.9%. To continue this, we had business inventories. So April increased by 0.5%. Forecast for May increased by 0.3%. So okay numbers right there. But here's a good one here. NHAB Home Builders Index. This is the confidence level for home builders. And in June, we had a 64 on that index. And in July, it went up a little bit to 65. This was better than forecast. A lot of people were kind of figuring it would remain at 64. And even though the confidence went up a little bit, this is even on news that home buyer traffic slipped a little bit. So even though there's less home buyers out there, the confidence level still went up. So good overall news there. So let's go jump ahead here to the headline news. Stock market right now, the only one at the time of doing this is Dow's the only one in positive territory. They're at intraday highs. A lot of them reached new highs yesterday from Nasdaq and everything else. So for the most part, the S&P and Nasdaq probably are more or less taking a breather since we're at such a high level in terms of the stock market. What taking center stage is mostly corporate earnings reports. We got the banking industry right now. Now, reports coming out in the banking industry is that a lot of them are beating expectations, even though the bar was set pretty low for Q2. But what they're seeing is that is the margins kind of shrinking a bit on them. And the loan activity is down. So that's why someone might be taking a little bit of a beating today in terms of the banking industry. But overall, they did beat their expectations on Wall Street. So let's see how this is playing out in the bond market. And the bond market is down about 11 basis points. We're getting in the process of basically changing to a price for the worst. So that means we probably could see this worsen a little bit today. We just closed a hair above this line here, this 25-day moving average. However, today we just kind of fell downwards. Right now we're by 11 basis points and teetering on 12 basis points. Usually when we're around 12 basis points, lenders typically will just price in a little worse pricing, and they may have already kind of done that. So depending on when they came up with the pricing, some lenders may have pricing a little bit worse than what we saw yesterday here. As you can see, we do got a lot of room here to the downside to the 50-day moving average. So it's possible, we may see that happen here. Especially considering we have the yields, so we got plenty of room here to the 50-day moving average, and right now they're up to about 213 level here, and this could reach up to about the 220 range here. So again, we got to be a little bit cautious here. We'll have to wait and see, but the yields are adding a little bit more pressure to the mortgage-backed securities, and right now we are seeing mortgage rates worsen a little bit here today. All right, folks, not the greatest news, but these things will happen. We'll nothing goes in a straight line. We will see these kind of zig and zag a little bit, but long term you'll see these come down. Right now we're kind of dealing with a speed bump here, and for the obviously the long haul we'll see these come back down a bit, but right in the short term we're seeing this go up a little bit. If you guys are in the process of buying or refinancing, go ahead and reach out. I'd love to be able to talk to you guys. I am a loan officer. I do work. My lender does work all 50 states, so my company can help out in all 50 states. We are home to two proprietary loans, all in one loan. Basically, this is a loan program that can help people pay off their mortgage much quicker, gives them a lot more flexibility, gives them more control over the mortgage. All things we love to have it. But it's a loan specifically for those who are cash flow, not living paycheck to paycheck. Uh, Otherwise, it's not really effective for those folks. It's basically only effective for those who are really good at saving, really keep the spending habits low, and this can really help them pay off their mortgages. I've seen them pay off as little as 5 to 7 years. On average, I would say between 11 and 14 years, but I have seen them come off in 5 to 7 years. Home Funded, great down payment program here for really a lot of different people. You could use it as a wedding registry if you're getting married. It could be for obviously for first-time home buyers, but not only that, it can be for people who have life-changing events. Somebody who in California, we get the problems with the either earthquakes or wildfires. People have lost their homes, need assistance or help to find their next home. We set them up with an account. Also, this could be great for people who went through divorce, where one spouse keeps the house and the other has to now look for another home. They can ask the community. Um, this could be also great for people who are just getting out of college, want be a future homeowner, so they can get started with the home funded to get ready in the next few years until they feel they're in position to, so they can start building up their fund for it. And if you want more information on that, just reach out to me. I'd love to be able to talk to you a little bit further about it. But great for college graduates as well. And of course, we got the usual. Pretty much most everybody has jumbo loans. We got conventional loans, which is Fannie and Freddie. We got FHA loans. We got VA loans. We got USDA loans, and we got the niche loans that some people may not have. Like our investor loans, loans specific for real estate investors. We got bank statement loans, which are fantastic for your self-employed buyers. And of course, we got foreign national loans. So if you guys are interested in talking, reach out to me. You can direct message me, and that's the best way to reach me. Uh, Love to be able to talk to you guys. You guys have a great rest of your day. Thanks so much for watching. Catch you guys tomorrow. Bye-bye.